Hello everyone, this is today's video analysis for April 30th, 2019. Today we're going to take a look at the NZDUSD New Zealand dollar versus the US dollar for today's trade analysis. We're starting here, of course, on the daily time frame, current trend. And when I say trend, I'm not talking about the what it's doing today or the past couple of days. I'm talking about the overall viewpoint of this currency pair has been bearish. It's been going down. If you look at the black trend line on the right hand side of the chart, we're looking all the way back to the top of the trend. We're looking back into March 21st. So a little bit more than a month now, this currency pair has been overall moving lower. Sure, over the past 3 or 4 days, we've seen the market pulling higher and going back up, but that's what happens within trends. Trends don't go in a straight line forever. Eventually, we'll have some sort of pullback, retracement, or correction before continuing the trend. I can just simply go back in time. Just want to give you a couple examples of that. Let's just go back on the left-hand side, and you can look within this uptrend. Within this uptrend, there were periods of time when the market went down here, and it went down here, and a little bit of period of congestion, not necessarily pushing down, but little bit of a pullback right there. So you can see within the uptrend, here's 3 times where the market pulled back within that uptrend before continuing the uptrend. Sure, eventually it turned around and went back in the other direction, and even within that downtrend, there were pullbacks higher. So trends don't go in a straight line for the length of the trend. They have periods of pullback, retracement, correction. And we may be in that phase right now for the New Zealand dollar because we're clearly still under the black trend line and in the downtrend for the New Zealand dollar. So it's very interesting that we're seeing that pullback. We're also note that there is significant resistance into the 0.667085 level, the yellow shaded area right smack in the middle of the chart. Let's zoom in on that a little bit. And so here's our downtrend. The circle shows 1, 2, 3, 4 days finding support at the yellow zone. Eventually the 5th day broke through and we saw the new low. Now it's come back up 2 days so far, finding some resistance into that yellow zone, and now the 3rd day finding resistance 66, 70, 85. What I'm trying to highlight here with these colored shaded areas here on the chart are areas of consistent market behavior, consistent trading decisions by the market. Consistently, the market is making trading decisions here to buy, sell, enter, and exit. That's why for a 3-4 day period, it will stall out, stop, correct itself at these colored shaded areas. In this case, 66.70, 66.85. That's what happened there at the black circle. The market paused. It bounced back up a little bit. Eventually breaking through it, sellers came back in, sold off again, and sent it lower. So there are decisions being made around this yellow zone. So if the market, the Forex, the entire market is making decisions around this zone, then I'm starting to consider my trading decisions around this zone as well. One of 2 things is going to happen. It's either going to bounce off of it and go back down in the direction of the trend, or it's going to break through it and continue its reversal and correction of the trend and go higher. Now, if it bounces back down, of course, we have already known targets on the way back down. The orange zone would be here, and then further down would be the blue zone. That would be the 2 places it would go, at least, if it started moving back down in the other direction. If it breaks through the yellow zone, then of course we're going to look for it to go back to the pink zone or higher, but the pink zone would be first. That's 67.15.30. And we can see that historically. We'll look at that later on in the live trade room. But here we are, yellow zone. This is our decision zone for the day. One of 2 things. It's going to bounce off and go down, or break through and go back up. 4-hour time frame, not really going to change that. It just shows the struggle that's going on between the buyers and sellers. We can look at this yellow zone somewhat like a battle zone, if you will. There's a battle going on. The front line of the battle, the buyers and sellers are duking it out right now for control of this currency pair. And right now, neither one has been able to retain control of the currency pair. So we're watching for clues and evidence and price action as individual traders who don't have any control over that battle. We're watching for clues and evidence of one of these 2 things. Either it breaks out above, we start to see candle bodies get above this yellow zone, and we start to look for it to go higher. That's one clue that it does something different and gets above 66.85. Or the other clue is we suddenly see a massive influx of sellers and it starts to turn around and go back in the other direction as a short. So we're watching for clues of that. Risk reward wise, let's just talk about that for just a second. Risk reward wise, obviously, is much better for the short side. Stop loss right now for selling is above the yellow zone. I would think that your stop loss at minimum is below the current lows, but may even be better off pushing it back down here to underneath the orange shaded area. So your stop loss is known. Your potential profit target right now is being capped by the yellow zone, so profit is not very great for buying right now. It would be better for selling, bet targeting back down to the orange zone. So risk reward wise makes more sense to be in a short than it does a long. Doesn't mean it won't go long, just makes more sense risk reward wise to be short than long in the direction of the trend. So as you can see, I've already got the trade going on down here, 66.70, bottom of the yellow zone. Pulled back against us a little bit here. We've seen a little bit of profit, a little bit of negative, nothing too extraordinary. We're looking to target back down to the orange zone in the direction of the trend. And again, the risk is the breakout above the yellow zone for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.